Eric, I also want to get your views, of course, on what's going on with OPEC Plus. And I say that in the sense that they have regained, I believe, control of the oil market and the price that we see. Can you talk to us a little bit about what you're seeing play out?
Absolutely. And it's a really critical point to make. OPEC is in the driver's seat, specifically Saudi Arabia is in the driver's seat. And we know that because they voluntarily cut production around July, effective July. And at the time, we've been in this environment where price has set narrative, meaning the price of oil has been weakening. We've been hearing about a recession, and people naturally assume, well, geez, it must mean that they see something. It must mean that they see weak demand. I do not believe that to be the case, and we have real-time data to prove that. The reason why I think OPEC is doing what they're doing, you have to appreciate the will and intent of the energy minister, His Royal Highness Prince Abdulaziz bin Salman, who's the first royal to be in that position. What I believe he sees is there are two markets for oil. You have the physical market, which is the biggest commodity in the world. In the physical market, we know record demand, faltering supply. But then you've got the financial market for oil, which is 30 times bigger. And in that market, oil is being used as a financial instrument to reflect either negative view on the economy, certain views on inflation due to rate policies, etc. And so price has been weak, not because of physical demand. We know that. We've never consumed more oil than in the history of humanity than we do today. It's been the financial weakness. So I believe their intent is to collapse the difference between those two markets. And they're going to do that by drawing down inventories aggressively. And in fact, by the fastest pace in history. We have inventories already back to 2018 levels as of today. We have them ending this year at about an 8 to 9 year low. And that's as far back as my satellite imagery will take us. So I believe that's their intent. And that's to collapse the difference because the fundamentals for oil remain strong. We can prove that in many, many different ways. But price up until recently has been very, very weak. Now, why can they voluntarily curtail production? It's because we're in a world now where US shale growth is faltering. We have clear evidence that well results are getting worse. Much of the best rock has been drilled. It was over drilled. And so the ability of US shale to respond to a rising price because OPEC is curtailing volumes, they can no longer do that, especially when they've got to prioritize variable dividends and share buybacks and deleveraging when the owners of their businesses, investors, no longer really want themselves to grow. So it's a very, very different world that we live in. There's profound geopolitical implications based upon OPEC being back in the driver's seat. So you really, as an energy investor, you have to understand the will and more importantly, the intent behind the actions of Saudi Arabia.
So what you're essentially suggesting then, if they're trying to collapse that price differential, it's almost an arbitrage play that they're doing and that they're in control to do. It sounds as though we will have higher prices for longer. Is that fair?
I believe we're in a structural bull market. Oil will always be volatile. It always has and always will be. It feels to me like there's a very clear floor at $80 oil. I think we've got an upper bound of about $100. At that point, Saudi and OPEC Plus will start to bring back volumes. I don't think it's in anyone's best interest to see $150 or $200 oil. That's when you see demand destruction, both temporarily and permanent. You see substitutions, all of these different things. But we'll talk later on, I'm sure, about investments. At $80 oil, we have companies trading at 20% plus free cash flow yield. So we're in a very, very happy place today, let alone where I see us going in the coming months as global inventories continue to fall.
So a couple points to pick up on. One, where does Canada fit in terms of providing extra supply to the broader market? How able or capable is Canada to do that? Even if, I don't even know if we're willing, just given some of the difficulties in Canada to pump.
Yeah, so we have the TMX pipeline coming online Q1 of next year. It's been deferred by a couple of months. It's as of now, I believe 94, 96% complete. But the same constraints on shale companies is being expressed on Canadian producers, primarily due to people like myself, the large investors that say, your stocks are so profoundly mispriced. How dare you try or even attempt to grow production? Because that will take away cash flow that you should be using to buy back your shares because they represent still a generational opportunity. And so that's the conversation being held by, I would say, all energy investors, institutional investors with companies. And you see in their actions, they have bought into that philosophy as well.
Yeah, we've certainly seen share buybacks, and we've also seen special dividends for actually quite a few years now from some of these energy companies. So hopefully that's something that will stay the course. We're going to take a quick break, but when we come back, I think we want to also pick up on why we are seeing such low supplies around the world and where EV fits into that. We'll be right back.